Hey everyone. Value investing is an investment strategy that focuses on finding companies that are trading at a price that is lower than their actual or intrinsic value. So the idea is that if you can find a company that is undervalued by the market, that means its stock price is trading below what the company is actually worth. Then there is potential for the stock price to increase as the market corrects this undervaluation. Value investors typically look for companies that are financially sound but are temporarily experiencing financial difficulties that have caused their stock prices to fall. So basically, they're looking for companies that are in some sort of temporary trouble, but they're fundamentally a good, solid, well-run business that has a bright future ahead of it. The second type of company that value investors like to look at are companies that are profitable brands that are not necessarily in any trouble, but their stock prices have just fallen because of negative news or some sort of a scandal. Again, the idea here is that the market is overreacting to this negative news and the stock price has fallen below its intrinsic value. So if you can buy a stock that is trading below its intrinsic value, then there is potential for the stock price to increase once the market corrects this overreaction. So the first step in value investing is identifying undervalued companies. There are a number of different ways to do this. One common approach is to look at a company's financial statements and calculate its intrinsic value based on its assets, liabilities, and earnings. Another approach is to compare a company's stock price to its peers and industry averages to see if it is trading below its competitors. Once you've identified some potential value stocks, the next step is to do some research to determine whether the company is fundamentally sound. This involves analyzing the company's financial statements, reading its annual report, and understanding its business model. It's also important to consider any risks that could affect the company's future performance, such as competition, regulation, and economic conditions. If your research indicates that the company is indeed undervalued and has a bright future ahead of it, then you can buy the stock. Value investors typically hold on to their stocks for several years in order to ride out any short-term fluctuations in the stock price and to allow the market to correct its undervaluation of the company. It's important to note that value investing is a long-term strategy that requires patience and discipline. It is not suitable for investors who are looking for quick profits. If you have any questions, feel free to leave them in the comments below.